Today's edition of the London Session Open. Today is October 23rd, 2019, and my name is Alejandro Zambrano. We haven't done this in a while, but I decided to do it live today, talking about these morning webinars. And I want to thank you so much for joining me. If you took your time to join me today, specifically at 9:30 a.m. London time. Uh, if you're new to this, this is a daily webinar we host here on investingcube.com, and it's a webinar to get you ready for the trading day, talk a bit about the levels that are moving the markets, and as well talk a bit about the macro fundamentals that are affecting things. So it's a lot about Brexit in the market, and that is pretty much driving most of the markets now. You can see decent correlations, and that's what we're going to cover. Now, if you're totally new to the website, up here you can see the latest news. And if you scroll to the very bottom as well, you can see the latest updates down here. And if you're looking for something specific, so maybe Forex, then you can see some of the updates here. If you want more, you click on the Forex button, and same way with commodities, indices, and cryptos. And we do try to cover all the main markets in the morning, and ideally by 11 a.m. Everything would be updated, all the major markets. So you're looking at about maybe 8 different articles in the early morning. Okay, let's begin, and let's see if anybody's in the chat. If you are in the chat, you're most welcome to say hello. So we have Karamarat saying good morning. So good morning to you, sir. Hope you're doing great. Not really sure why this little chat box is so small today. But yeah, guys, you're most welcome to say something here. And if you want to stay in touch as well, don't forget that you can follow me on Twitter. And that's I'm not sure I can post links right now, actually. Yes, I can. So that's the link to my Twitter. Okay, so we are live and we're ready to go. So let's do that. Okay, so let's talk about the pound, right? So this is the pound versus the USD. So the market declined slightly yesterday here. You might say, why did the pound decline? Well, firstly, we had a very good run over the a few good days, and what looks now is that the market somehow maybe was anticipating that they would pause the new deal that the EU and UK negotiated, and as well that they would pause that speedy fast track timetable that the UK government has suggested, because it's one part just voting for the deal, which the MPs did. But then it's all about those details, and there's two big things that could potentially change the whole way how it's structured. One would be to push for having a referendum on the deal. The other one is to make sure that the UK has a permanent customs union with the EU. So there's still time to shape this deal, and they wanted to cover everything in about 3 days. But it's going to be very difficult, at least that's what the PMs are saying, because there hasn't been any sort of economic analysis of this deal, and the document is about 120 pages, and I think there's another about 100 pages of explanatory supporting material, and this was just published, I think it was Monday, so and it's Wednesday today, so UK MPs said they needed more time. Now what's going to happen now, I think, is that the EU is probably going to give an extension. So the Ben Act says that the UK should ask for an extension to January 2020. And I think if the EU could potentially say, okay, you can get up to January, but if you would vote through the new regulation or the new laws before that, say 3 weeks time, then the Brexit can be concluded, or the divorce can be concluded at that point. And at that point, they will start to negotiate, guys. So that's the other challenge here. It's probably going to take a few more years to negotiate the future relationship. But at least the UK would be off the hook, so to speak, and can start to negotiate with other people. So that could be something. And I think that's probably where we're leaning towards. So from that perspective, it could be quite good for PM Johnson. But I have a feeling that UK MPs will not vote for the deal the way it looks right now. They will vote for some amendments, and I think what's going to happen is that probably PM Johnson is going to find himself asking for a general election, and that may happen before Christmas. I think that's the most likely scenario. So if anything, uncertainties are probably going to increase going forward, and we had a very nice rally here. We can easily go upwards, but again, we had a very nice rally, and I personally think it's time for this to trade a little bit lower before heading higher. Now, technically, though, I mean, I have my opinion and I have what I think is going to happen, but technically, I'm not allowed to take on that view just yet, because technically the trend is still bullish, right? The price is creating these higher and higher lows, and the technicals here are here to agree with me, or to sort of not agree with me, but they can and cannot, and sometimes they can and will, they will sometimes support my macro view, and sometimes they will not support my macro view. Uh, and I always follow the technicals, so there's no, they need to be aligned with my macro. Many times I just trade on the back of the technical. So I think all of what I just said is going to happen. I think that itself can cause a little bit of a dip, unless they get 3 more weeks and the new deal is passed without any problems, which I think is very unlikely. At that point, the market might just go upwards. Now, technically, in the short term, people are very optimistic. They're definitely not as dovish or bearish as I am, and that's what the trend is telling you here. They're telling you the trend is bullish about 127.47, and between these two levels, some people might buy and lift the price to the upside. Now this is the Euro USD. It's been supported on the UK EU Brexit negotiations. It's also been supported on the idea that US and China are moving closer. But let's see what happens tomorrow. Tomorrow, Thursday, we're gonna have PMI indicators from the Eurozone and the US. If they again show a slowdown, then that would again put, I think, the dollar in the driving seat, and we could see some dollar strength. For now, though, the trend remains bullish, and if you've been looking to buy, then this is the little buy area that I would be looking for. Whereas a break to something like 109.96, it's probably going to push price lower, and then probably upwards, and then pretty much down again. Dollar versus the Japanese yen starting to become really, really boring. There's not a lot of activity here. As you've probably seen, stock market indices as well sort of stopped in their tracks, and we're not getting so much support from them. Government yields, though, are moving slightly higher, and that's supporting the dollar yen. Technically here, we're still dealing with that breakout. Remember, we had 1, 2, 3 highs. We took that out. That should actually have opened the door for a rally to the upside. And then we could have bought dip if we wanted to in this little buy area between 108 and 108.50. But so far, we're in the green for a few days, and now we're back in red. I will continue to be bullish. The trend is bullish. I don't have too high hopes about this one, though. It could be a 1 point B that we need a little bit of a steep pullback, because you see we go up, we go down, we go up, we go down, we go up. Maybe we're going to go down and then potentially worse. At the same time, actually, let's not do that. Problem with technical analysis is the following. You can always find out a bullish and a bearish scenario. Unfortunately, that's always possible. So that's why if you have a bit of a view on the world economy, then that helps a lot. Bearish, especially if tomorrow the market PMI figures are bad, then that would indicate that the world is not doing as good, and that could potentially send the yen lower, and that would probably indicate that we could probably maybe sell here for the price to drop all the way down. And if the numbers are really horrible, we might go back down to 105.20 in a few days or a few weeks. Crude oil is going in the right direction. The idea, since we started to hit these levels in the beginning of October, was to buy here. We talked about buying here for the market to go up to the midpoint. Did not go all the way up, and then went down, and I said you can probably buy here. Eventually went up a bit, and then we went back down again, and then we went up a bit. So obviously the best scenario here has just been buy here, sell here. I've done that 1, 2, 3 times. Maybe we'll be able to do it a 4th time. So, because I'm gonna stick with this view that we're eventually gonna go higher, because I'm treating this big range here from June as a big sideways pattern. Gold prices are being very, very boring, and overall the trend is actually bullish, but in the short term we're dealing with some sort of a wedge. And I've been saying here for quite some time that it's possible to sell between 1509 or 1507 and 1519 because we're limited by that downtrend. We're limited by these higher and higher lows. Now, if we do take out the high, the market will probably trade upwards, okay? So I think that makes perfect sense. But I would have wished if this would have happened earlier because this is now starting to wake up. You can see here how the price is uh, trading sideways, and sorry about that. Uh, sorry about that. So we can see how the price is trading sideways here, and eventually when things start to kick off and start to move around here, you can get a bit of a short squeeze here in the market. So up and probably down. Uh, Would I sell here at the first attempt? Not really. Wait and see what happens up here. S&P 500. So this is the S&P 500, and I actually lifted the little buy area here because we've been missing out on the buy area. I have also tightened up the trend defining level quite substantially. So I've been focusing on this low, and the idea was to buy here. I think we missed that little entry with just a few pip, and then we went up, and I actually lifted the buy area here again this morning. So between 2972.9 and 28.82.7, the trend is bullish, and I think here, some people will buy here and then lift the price to the upside. I'm not very super enthusiastic about this, but the trend is bullish, and we could technically go up, and then we could potentially go upwards. And the price is struggling with this median line, and that median line is blocking price. And if you look at something like the US 30, so this is the Dow Jones, you can see that the price actually got blocked at the median line. And when it got blocked at the median line, like it's been here and here and here, the price would go down usually to support. You can see here how the price went down, and here as well it went down, and here as well. So here, this one is actually leading and is telling us that we're probably going to trade lower, whereas the S&P itself is just still around the median line. So technically what could happen here, especially if we take out this high, which is the October high at 3012, then we can have that move. So it's a bit in limbo. At the same time, if we trade below the trend defining level, we're probably going to go back down here, and you'll see the S&P in essence just aligning itself with the Dow Jones. Now here's the German DAX, and the German DAX is lingering around these highs. A few days ago I said you have a pin bar, and following a pin bar you tend to see some more profit taking, so the market can go down. The market went up, and then it went slightly lower yesterday, and then I think on the back of comments this morning from Germany's Maas, the market got super excited and lifted things to the upside. The way this looks right now, the short-term trend is pretty much neutral, and you're stuck in a relatively beautiful rectangle pattern between 12,599 and 12,824, and a break to the upside could lift price to also 13,048, whereas a break to here could take it down lower. So this is super neutral. One can trade either direction here, either bearish or bullish, and then that's it really. Okay, let's see if you guys have any questions. So we have I'm not sure why this one went a little bit haywire. Let's see if we can do it like that. So we got Drone saying good morning, and we have Marvin as well saying hi, Alex. I hope you guys are doing well, and thanks so much for joining me this morning. If you do guys have any questions, you should put them in the chat box. Is there anything else you should be paying attention to today? Well, let's load the economic calendar. Oops, that's the trading charts. Okay, let's see. I'm not sure we're gonna be able to load. There we go. So Wednesday, we only have house price index and crude oil stock change. So there's not a lot happening right now in the market. Okay, I think we're gonna wrap things up unless you guys have questions. Um, if you're not following the, I'm not sure if you can see that actually, but if you're not following the Investing Cube handle already, please make sure you do. You got the Twitter and the Facebook up here. As well, you will notice that some of these articles are locked, and you're gonna see that because it says something. Actually, I'm logged in myself, so I can see everything. It will look like this. You can click up here for notifications, a pop-up or so once a day. But you can see that some of these are locked. So it's very straightforward. Just to read this, you just need to click on them and become a member. It's super straightforward. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow. And you can subscribe to my Twitter or the ATFX YouTube channel, and you'll get notifications when the new video's up. Have a great day, and thanks so much for your help, and don't forget to like the video. Thank you, and bye.